So here's where I'm at. I'm still personally bullish on a strong run next year, 2026. In the short term, though, from now until the end of the year, my view stays neutral because I don't know how exactly the market will behave between now and the end of the year. I don't think anyone does, honestly. And if you know me and you've been watching my past videos, you know I believe we've broken away from the 4-year cycle, as many macroeconomic Bitcoin OGs in the space also believe. And we're gonna cover one of them in today's video, so hang tight. So considering we've broken away from the 4-year cycle, I don't think anyone knows what happens between now and the end of the year. And I think technical analysis just, in my opinion, is not really informed to predict what's gonna happen, because all past technical behavior on behalf of Bitcoin is not relevant anymore. The macro environment has changed too much. Anyway, what we do know is that the Fed's stance has just changed from hawkish to dovish. And all that regulation takes time to take effect. And most of it will take effect next year, which is why I return to my premise in saying that I believe next year will be bullish. And I do believe Bitcoin will go up to $1 million in the near future. So what I'm gonna share today are simply updates on what happened in the market. We're gonna do a quick recap on what's happened so far, what has brought us to this point, and then all the intricacies and all the details of what has been affecting the market and some bullish indicators that we also see that lead me to believe the market is gonna recover here. How, once again, no one knows. But that said, let us get into today's video. Okay, so before we get started, I think it's important to do a quick recap on what has caused these market conditions. Now, some elements are unknown. They're on a higher macro level, and I will be doing a video tomorrow on CBDCs as they relate to digital IDs. We know Apple just dropped its digital ID feature, and as it relates to the US dollar, stablecoins, the Genius Act, etc. That said, there are larger macro forces at play here, but in terms of the crypto market specifically, the drop we have seen in the last 41 days, much of it has come as a result of too much leverage and too little liquidity in the market. In mid to late October, institutional money started pulling out. We saw crypto funds logging more than $1.2 billion in outflows in a single week. All while at the same time, traders were stacking with 20x, 50x, and even 100x leverage, like it was normal. So when a market is geared up that high, a tiny little move acts like a lightning fuse, and that's what we saw. A 2% drop can easily become an 8% drop, and that turns into forced selling. We know forced selling triggers more liquidations, and because liquidity was already thin, the order books could not absorb the size. So everything moved too fast is what we saw. In just 16 days, we saw 3 separate $1 billion plus liquidation spikes. And the biggest moment hit on October 10th, when the market cleared more than $20 billion in liquidations and printed a 20,000 daily candle on Bitcoin. So essentially, what we've seen is a market tripping over its own leverage, tripping on its own feet, so to speak. And once a cascade starts, it keeps going until every over-leveraged position is gone. And from there, from here, the story continues in the data, where the market's reaction shows up. And we know the markets speak through their relationships between each other. And when relationships break, something structural is happening, is what that means. That in mind, we know Bitcoin has been moving in tandem or in rhythm with gold for more than 1 year. Both of them, gold and Bitcoin, were acting like safe haven assets under the same macro regime. And after the liquidation shock in October, the rhythm snapped. Gold moved up and Bitcoin moved down. Gold has now outperformed Bitcoin by 25 points during this window of time. So this kind of divergence we're seeing between Bitcoin and gold shows and speaks of some internal stress. And Ethereum makes the picture even clearer. ETH is down 8.5% on the year and down more than 35% since October 6th, all while even equities and gold pushed higher. So when assets that usually move together start moving in opposite directions, it shows the pressure is coming from inside the crypto system, and sentiment confirms it. The fear and greed index hit 10, which essentially matches the same reading we saw in February, after which shortly Bitcoin gained roughly 25%. So even though extreme fear appears when markets get exhausted, that's also the moment when heavy deleveraging finishes. And right now, analysts see the same bottom forming signals showing up again. So even though I know, and I hope you know, based off of your own research, that Bitcoin will go up to $1 million someday and in the very short run. And we have many powerful voices, one of which I will cover here in just a moment. So hang tight, including Eric Trump, including a few other speakers. Even Charles Hodgkinson was saying in an interview that he believes we're only halfway through the cycle. So you hear this from a lot of really knowledgeable thought leaders, giants in the space that have been here almost since the beginning of Bitcoin's inception. Many believing this cycle is different than past cycles, as I have been saying, and many believing we're only halfway through, and many believing we're even going to close Q4 with a really, really bullish Bitcoin. That said, in light of market conditions today, I am very careful and respectful in not coming to you with an overly bullish tone of voice, because I don't know the way Bitcoin plays out from now until the end of the year. We have many reasons to believe it'll go up to $1 million in the short term, short to medium long term, definitely within the next 5 years, as I keep saying and repeating. But for the time being, I don't want anyone doing anything irresponsible. Don't go put in any longs. Don't over leverage yourself. You need to be steady right now. But now let's get into the most important shift we see happening beneath all of the bearish sentiment we see in the market and in the charts. And that is the fact that OG Bitcoin whales have been selling aggressively. These are wallets that have been holding Bitcoin for years and sometimes a decade or more. And in previous cycles, whenever these whales unloaded or started selling a little bit, price collapsed because there weren't enough strong buyers ready to absorb all that liquidity, all that sell pressure. Well, this cycle we know is very different. We have institutions in the market with us, and we have seen these traditional finance and institutional players stepping in to buy up this sell pressure. ETFs, Michael Saylor's company Strategy, pension funds, sovereign funds, they have absorbed it all. And we hear from Ki Young Ju, one of the top chain analysts in this space, and I believe he's one of the highest holding IQ holders in the world. He broke it down clearly, saying that old Bitcoiners rotated, okay, or their Bitcoin rotated into traditional finance buyers' holdings, who now will hold for years. So ultimately, it's a good thing for the Bitcoin market and Bitcoin's price. But in the meantime, we feel the turbulence. We see the sell-off pressure, which we see reflected in our portfolio and our Bitcoin holdings. And that can be very scary. So I understand if anyone is scared. But if you're holding Bitcoin, just really understand, take a moment to understand you're holding gold, okay? You're holding the asset that people will, I don't want to say go to war for, but that's kind of what we see going on right now. It's just a different kind of war. So just understand what you're holding and do not sell. Speak to yourself, do whatever you have to do. Do not sell your Bitcoin. Anyway, as I was saying, what we see right now are long-term institutional capital holders, okay, becoming the dominant holders. That's why this cycle is behaving different, or it's one of the key reasons. And now let's take a look at where these largest buyers, these institutional holders, how they're positioned and how they position themselves during this crash, because there is a lesson there for us. We should be mirroring our investment decisions after smart money. And that's why I ultimately know this bull run's not over. It looks very different. I am going to be very careful and cautious in calling like, oh, it's going to go up right now or whatever. I'm not going to get into the granular because I don't think anyone knows right now. But I do know that smart money knows, okay? And all we have to do is look at their behavior. to get a sense of what we should be doing too and where the market's going. That said, this is where this apparently sad story takes a turn because while retail, okay, the 99% has been panicking and have been panic selling, the biggest players in the world are quietly starting to add to their positions. They're not scared, they're buying more. And they're not rushing or reacting to headlines, okay? They're being methodical and they're using these dips, this volatility to buy more, as should we, as should you if you can, though this is not financial advice. And we actually see that UBS, one of the largest banks on the planet, picked up roughly, okay, just hang tight, listen to this, $475 million worth of Bitcoin during this recent correction time period. Okay, so while everyone's been scared, they've been buying, and in the hundreds of millions of dollars. And we also see that the Canadian Pension Plan, that's what it's called, stepped in too, adding 393,322 shares of Strategy, which is around $80 million, right in the middle of the correction, where everyone has been so scared in the crypto market once again. And then you have Strategy itself adding another 8,178 Bitcoin during these times, which equals about 835 million. So these aren't emotional buyers or traders once again trying to time bounces. I'm not about that. Okay, that's once again not what you're going to get here on my channel. I'm a fundamentalist and I look at macro conditions. What we see right now in the market is long-term capital using volatility as they always do as their entry point. To them, they're excited. Bitcoin's on sale right now. These smart money investors make decisions on multi-year horizons. They're looking at the next 3 years, 5 years, 10 years, even the next 100 years. Okay, that's how they think. And that's how we need to think. If you want to retire and truly become financially independent, you have to shift your entire mind frame. And this brings us into the next part of the video because stablecoin flows show how the next wave of liquidity is already lining up beneath all of this chaotic news front, so to speak. And actually, this section is what does have me bullish on a personal note for this next phase in the market leading into Q4. So let's take a listen. All right, we all know, and if you've been in crypto for some time, you know this, that stablecoins act like dry powder. Okay, it's a big, big signal when we see USDT printing, creating more Tether, more stablecoin, because stablecoins are the entryway into the crypto market for just about all investors, right? You use USDT to go buy whatever other blue chip token or meme or whatever, right? Like that. So whenever there's more stablecoins being created, and a lot of movement of stablecoins onto exchanges, it's always a really bullish signal. Okay, but once again, I'm being careful in how I frame what's going to happen next to the market. But just take a listen; it's extremely bullish because right now we have seen $9 billion in stablecoins moving onto Binance. That is one of the largest inflows we have seen in years. And moves like this usually appear right before volatility picks up and a new trend begins before the market pumps. So this kind of an inflow fact is what tells you and me that big capital is getting into position. And we can see the same pattern across the other chains. Solana, for instance, just saw 625 million in PYUSD inflows and another 431 million in USDS. And when we zoom out across the entire ecosystem, the total stablecoin supply is now sitting around $303 billion. Ethereum alone holds 185 billion of that, which is more than 61% of the entire supply. So there's something very important happening here. This isn't just crypto native players moving the space forward. We see global companies stepping in. Alibaba, for instance, is working with the JP Morgan on stablecoin payments, which means this isn't just DeFi chatter anymore. This is real on-chain settlements entering mainstream commerce. And Samsung is moving in the same direction. They just enabled Ethereum staking on Galaxy devices, giving more than 200 million people one-tap access to ETH yield. So when staking becomes a standard phone feature, it shows how quickly crypto rails are being integrated into everyday life. And all of this points to one thing: liquidity is rising beneath all of this superficial drama. It's noise, guys, and it goes deeper than payments and staking. Trump's firm and Saudi partner, Dar Global, are developing a luxury Maldives resort and plan to tokenize ownership of the entire property. So once they do, what do you think is going to happen to the rest of all the properties, luxury properties in the world? It's going to be a domino effect. Their project will include 80 villas in all on-chain. This will be the beginning of something huge. I'm just calling it now. So this is a high-end real estate project using blockchain rails at the infrastructure level. So now let's take a look at how the market is positioned as Bitcoin sits on this critical level. Short-term holders pushed more than 64.6 thousand Bitcoin to exchanges at a loss during peak capitulation. Whenever this group flushes out, it usually means the fast money is gone and the market is ready to start resetting. You see this pattern every single cycle. And we can see right now the same setup forming across the majors. Right now, Ethereum is holding its 0.618 Fibonacci retracement after sweeping its November 4th low. That level keeps Ethereum inside a window where a move higher becomes possible. And Solana is showing strength too. Its ETFs finished last week with 12 million in inflows and have now seen inflows for 13 straight days. This kind of consistency only shows up when institutions keep buying through volatility because they know what comes next. They know Solana is valuable and valuable into the future, or they would not be putting this much money behind their ETF purchases. And Bitcoin, we see, is lining up as well with its own technical milestone. Its price moved into the region of the large CME gap around 92,000, a level many traders expected to act like a magnet before the market starts building its next structure. That area, okay, often marks the end of a reset phase and the beginning of something new. So if we put it all together, the picture gets quite clear. The market went through a heavy unwind and is now rebuilding. Liquidity is reloading and capitulation has already taken place. And we saw that institutions absorbed the supply. They gobbled it all up. They loved it. But thankfully, we now see stablecoins are stacking. And we see that the market structure is tightening as Bitcoin holds this critical zone. So as we wrap up today's video, I hope you can see all that I laid out. I hope you understand what caused this correction in the market for the last 41 days. I hope you understand it's not smart or wise to over leverage yourself. Right now is not the time to put in any long positions. It's just time to hodl. Take a deep breath and hodl. That's it. And now that the market has reset and the fact so many stablecoins have been moved onto major exchanges, how that's a sign of what's to come in the market. And how the simple fact institutions have been gobbling up so much Bitcoin while everyone else has been panic selling is one of the strongest signals of what is to come in this market. That it's valuable, that Bitcoin is the new digital gold. So I hope your takeaway from today's video is to not give into the headlines, to not be scared, to be steady, and to understand there are larger forces at play that are shaping the market. Okay, it's not all manipulation, but there is some of that. But there's also just regulation that has just turned dovish, okay? And all of this new regulation, including a new Fed chair, they're going to take effect next year. So I do believe that we have broken away from the 4-year cycle, and I believe that next year is going to be very bullish. How exactly it plays out, no one knows. But do we have every reason to believe it's going to be bullish next year? I think we do. So in the meantime, all you have to do is hodl. All you have to do is stay calm and steady. And that's it. I love you guys so much. If you gained any value from today's video, or appreciated the candid honesty on where we are in the market, then I would ask you just like the video, subscribe if you haven't yet so you don't miss my next videos. I love you guys so much, and I'll catch you guys here tomorrow. Ciao.